In today's video, I'll be going over the performance of my June stock recommendations. Now, 1 month really is not super important in the long-term time frame of my investing. So I'm going to continue to track all of the stocks that I've ever recommended each month and see how they are doing. But I'm really not going to pay too much attention to the 1 month performance. What I really care about is how they perform over the next few years. However, it is nice to see gains over the 1 month. So here is a reminder of the 7 stocks that I picked. 1. LyondellBasell Industries, 2. Shire PLC, 3. Delta, 4. ExxonMobil, 5. Gilead Sciences, 6. Realty Income, and 7. Phillips 66. The first stock that I recommended in June was LyondellBasell Industries, and I posted the video on May 21st. It's looking like it's not going to let me do May 21st, so I'll do the 22nd. And since then, it is up 4.5%. So very solid 1 month returns. Like I said, I'm not investing for how a company does in 1 month. I'm investing for how a company does over the next 3, 5, 10 years. But it is nice to see solid returns on the 1 month time frame. The company that I recommended was Shire Pharmaceuticals. They have done the worst of the bunch, I believe, so I recommended them here, and since then they are actually down 8.5%. So I did buy more around this level right here. They're still a good buy. I still have faith in the company, just a short-term dip in price I used as an opportunity to buy. So like I said, good company, down 8%, 8.54% since I recommended them. To Delta stock, which I recommended as well from May 22nd, it is up 11.2%. So that is really a tremendous return in 1 month. Still like Delta, still a good company. It is up a bit. It is trading at a 10 price to earnings ratio right now. Before it was at about a 9. The average for the airline industry is an 11, so there's no reason that Delta should have been trading at a discount to the airline industry. They are up 11% this month, which is great to see. Next stock was ExxonMobil, and so I recommended them here. And since then, they are pretty much flat, down 0.84%. So I still like ExxonMobil long term. It's a great play. I think they're a very solid oil company, but in the last month, they are pretty much flat. We have Gilead Sciences. I recommended them as well, and they've really done quite well. They are up 11.5% in the last month since I recommended them. I still think Gilead is a great buy. As you can see, 7.6 price to earnings. It's a tremendous company. And hopefully this is the start of a turnaround in their share price, and this momentum can continue and bring them into the 80s where they belong. In the end, I recommended Realty Income as well, and since May 22nd, they are up 5%. So that is nice to see. Like I said, this is more of a dividend company, 4.46% dividend, but this 5% move is also great to see. The final stock that I recommended was Phillips 66. So since May 22nd, they are up 4.38%. So that is also a nice move from them. They also pay a solid dividend. They are a good company, so that is nice to see. We're going to look at how an S&P 500 ETF did over the last month so that we can compare our returns to the S&P 500. So starting on May 22nd and going to now, it is up 1.72%. For dividends, what I'm going to do is just add up all of the dividends of the companies and then divide by 12. So I get what you would get paid in dividends on the average month. I'm not going to actually go through and look at what companies had their ex-dividend date over the month because, like I said, we're going to be holding these companies for more than a year, so it doesn't really matter that much exactly when the dividends are paid. This will just give us the average amount we would be paid in a month from holding these companies. I think this will be the easiest way to go over what the dividends would be if it bugs you guys and you'd rather have me check which companies had their ex-dividend dates. You can just comment that and I can start to do that if you would prefer. So pretty much what I did, like I said, is calculated the average dividend that each of these companies pays in 1 year, which came out to about a 3% average dividend, and then divided by 12, which would give me the average amount that you would get in 1 month from these companies. And it came out to 0.25% average monthly dividend. And then I did the same for the S&P 500 ETF, which came out to 0.158% average monthly dividend. So this month's return comes out to 3.9% from averaging all of the stocks if they were equally weighted. The killer in there was Shire. If Shire had not been in there, it would have been 6%, but like I said, Shire is still a solid stock. And then adding our average of a 1-month dividend of 0.25%, we come out to a 4.15% monthly return with dividends. Finally, comparing our picks with the S&P 500 ETF, which returned 1.88% with dividends. In the end, we outperformed the market with our picks by 2.27%, which is great for 1 month. Like I said, 1 month really is not that important since we are investing for long-term, multiple years, but it is nice to see that we are off to a good start with a 2.27% outperformance in the first month. Thank you for watching. Please remember to like and subscribe.